Hey everybody, Pup here with my midweek review. Rather this week going over individual names, just based on where the market is right now, I think it makes a lot more sense just to go over the indexes. So let's start off with SPY. So here I'm anchoring back to our March 21 lows. And you can see we are coming right into actually the May lows, coming right into the anchored VWAP from that May low, and this dotted line here, that's going to be our 21 weekly moving average, and the Fibonacci retracement here is from that swing low to that swing high. So if I draw that out for you, basically taking this swing low and that swing high, the retracement here. So you can see we bounced right off of the 50% retracement at 429 last week and came back up, made a lower high, and now we've come into the 382 with the anchored VWAP from the May low and the 21 weekly moving average. So we do have a confluent potential support level here. However, if we get below this volume shelf and this level, I could say we're pretty much going to almost guarantee we're going to test 429 again. See if maybe we get a double bottom here, but right below that we have the anchored VWAP from the March low that I was just talking about, and then below that we have our 618 retracement. Now below that obviously it gets a little scary because we have our volume shelf, and likely if we lose this volume shelf here, that's where we're probably going, unless we get like a short intraday dip and then we get this long wick like we got right here, right? But if we do get a breakdown below 429, I would be watching for 423. And then, of course, below you have the year-to-date anchored VWAP, which is in purple. And you have the 200 simple moving average here in red. So for the next few charts that I go through, just keep that in mind. Now, on this relief bounce that we got, you see we came up to 50 RSI and we got rejected. Whereas 50 RSI was support back here, support back here, support back here, and support back here. Here it's now turning into resistance, and so that's a little troubling. I'll let this clear out. And so what I'm looking for, the other thing too I wanted to note is this 4236 Fibonacci extension. That's a major Fibonacci extension. We came into it perfectly here, and we also had a little bit of negative divergence coming into that line. So you could see, you can't make this stuff up, right? We had this channel coming up, we gapped below it, we retested it, we held it for 2 days, and then we gapped below it again. So, right now we're just in a wait and hold type of time frame to see where the market is going to go. Best cash is definitely a position here. Trading even these intraday moves, with the Fed talks, the quad witching 2 weeks ago. It's been a really tough environment to trade, so best to really sit on your hands and wait for the market to resolve itself. So let's go into the Qs. And you're going to find that most of these stories are pretty similar. The Qs definitely weaker in respect to SPY. Sorry, I was just moving my volume by price tool here, and you can see based off of the May lows here, we're already losing this volume shelf. So what I'm going to do is just move this back to the March lows, and you can see that we have another volume shelf back here down at 340. Now, there's a pretty big volume gap right here, and you can see we're also coming into that 21 weekly moving average and the May anchored VWAP low. Below that, I don't see too much support here. Now, of course, we could drop a trend line, right here at these highs at 343, but look at where that brings us. It brings us right to that that March swing low anchored VWAP. So, and then right below that, you have the 200 simple moving average, and right below that, you have the year-to-date anchored VWAP. So I would be very cautious under 354 on the Qs, because under 354, I definitely think we're likely to come down to 343. The other thing I could do is I could drop a Fibonacci retracement to see where we're at in regards to this previous swing. And yeah, we're coming right into that 382. So we've got a nice confluent area here for a potential bounce. But if we lose that, 349.82, and then more likely 343.18. Let's take a look at small caps and IWM. Okay. So of course, still stuck in a range. We're pinned right at this volume shelf here. Not really much to say. However, you can see that our rising 200 simple moving average is leveling off, and that's exactly where we are. Now, we did have a couple of days where we lost the 200 and then quickly recaptured it. So I would look for this to hold, but if it doesn't, you know, I would be looking for 214 and then possibly 210. Under 210, I'm not even going to look at that right now because it's not good. Because, you know, again, small caps have been consolidating. So obviously I want to see, you know, a breakout to the upside, not necessarily a breakout to the downside here. But if that happens, we will certainly revisit and take a look. Let's take a look at the semis. I was pretty positive on the semis last week. As we closed this gap, it came back up to our rising wedge top. But when you have rising wedges like this, generally they do break down, and that's exactly what we're seeing today. We did lose the 21 weekly moving average. We stopped right at that 382 Fibonacci retracement from the prior swing low to swing high. So swing low being here, the swing high being here, 382 is right there. Below that, I would watch for 249, and then below that, 243. And then, of course, you have the 200 simple moving average and the year-to-date anchored VWAP there. You know, RSI is not quite oversold yet, but, I mean, it's getting there. You know, we're getting to that point where we're possibly in bounce territory. So keeping a close eye on semis for the rest of the week. Let's take a look at energy. Posted a tweet thread about energy costs. The price of oil, the barrel, I think closed over $80 yesterday. And I think new price targets are going upwards of $90. So higher oil prices equal higher gas prices equal higher energy costs. And so no surprises that we're seeing energy starting to move. So we were in a falling wedge, or you could look at it as a bull pennant as well on a bigger time frame. And you could see we did break out last week, and you know, we're holding so far the gap up right at this little mini volume shelf. And let's see where we are in respect to previous highs here, right at 54.46. So let's drag that line over, and we haven't quite hit that high yet. We have a rising 200, our 50 simple moving average, which is this bright blue, looks to be curling back up. We're over our 21 weekly moving average. But the one thing I wanted to note, normally when I have my ETFs, I'll generally just have the top holdings. But I thought it was really good to note on XLE, the top two holdings is almost 50% of the entire index. So ZOM and Chevron, Exxon and Chevron are going to be your two top names that if energy continues to outperform the market, watch ZOM and CVX. Now, also the last thing to note, we did have an RSI breakout today, or actually yesterday, holding it today. So looking pretty good as far as energy. And then the last index I want to take a quick look at is transports. So transports did break out last week, and it looks like we might be coming down for a potential retest. Let me re-anchor this volume by price here. And you could see that we are still in a pretty big volume shelf here. And the bottom of the volume shelf pretty much coincides right with our wedge top. So I would watch for a move off of $85 to $86 on XTN. But what you can also do is just look at some of these names. Now, I can tell you right off the bat, Carl might be the only one that I'll look at, but you can look at any of these top names in these two ETFs. But you know what I like to do is see where the relative strength in the market is, and then dig down deeper, seeing what the actual charts that make up the composition of those ETFs are doing. And CAR has been something I think we got in at $95 right back here off of this all-time high breakout, and it's been going nothing but up. Now today was the first day we pulled back, but look at the candle that we got yesterday, right? Inverted hammer. So, you know, if I ran, let's say a Fibonacci, you know, extension off of that level, or this C wave, you know, we'll probably see a 1618 or a 1272. Let's just put that in real quick. So yeah, we're in between the 1618 and the 200% extension off of this C wave. So for me, this is looking like a 1, 2, 3 setup. If this is our 3 high, I would watch for a full 4 pullback right around 105 to 110, right at the top of this broadening formation breakout, and then watch for a wave 5 up to about 150. I'll flesh this out a little deeper and get this charted and posted later, but you can see we're already in overbought territory here, so I'd want to see CAR pull back a little bit before potentially moving back higher. So, I mean, that's what I'm seeing right now for the market. Again, I'd love to look at individual names more like CAR, but there's very few out there that are showing the type of relative strength that CAR is showing. So best to just look at the indexes, see where we're at, and then take it from there. So that's my weekend review, or my midweek review. If you have any questions, feel free to DM me on Twitter or catch me in the room. Have a great day, everybody.